SCHD, the Schwab US Dividend ETF, just announced their Q4 dividend payment for 2024, which would actually be their second largest dividend payment of all time. And with this being SCHD's last dividend payment of the year, we could sit back and analyze the stock's 2024 performance and previous years as well. So what exactly is SCHD? The Schwab US Dividend Equity ETF is an exchange-traded fund designed to track the performance of the Dow Jones US Dividend 100 index. That's a fancy way of saying that this ETF invests in 100 high-quality companies with a solid track record of paying dividends. It's an easy way to invest in some of the best dividend-paying companies in the United States without having to pick individual stocks yourself. Now, this fund has a very clear objective. It aims to provide income through dividends while also giving investors long-term capital appreciation. And let me tell you, it does both very well. Now you might be asking yourself, why should I care about SCHD? Well, there are a few key reasons why this ETF has become a favorite among dividend investors and why I hold it in my portfolio. First off, SCHD has an attractive dividend yield. As of the latest data, it sits at about 3.5% annually. That may not seem like a huge amount compared to some high-risk, high-yield investments, but when you consider the quality of the companies it holds, it's a really solid return. Plus, that yield is consistent. SCHD has a history of maintaining and even increasing its dividend payments, which is a big deal for long-term investors who want to see their income increase over time. As you can see, my dividend payments now are sitting at $28.62, but if we scroll down, my very first payment on July 1st of 2024 was $2.14. So as you can see, if you continue to put money in, your dividends will grow. Something that we also have to take into consideration is that SCHD doesn't just invest in any company that pays a dividend. It focuses on high quality, stable companies. The selection criteria for the Dow Jones US Dividend 100 Index includes things like a track record of paying dividends for at least 10 consecutive years and having strong financials. This gives you exposure to blue chip stocks in sectors like technology, healthcare, consumer goods, and industrials. Another reason to love SCHD is because of its low expense ratio. It's sitting at just 0.06% as of today. And since it sits at 0.06%, it's one of the most cost-effective ETFs out there. And in the investing world, low costs are crucial because even small fees can eat into our long-term returns. So when you're paying just 6 basis points a year to hold SCHD, you're already ahead of the game compared to many other ETFs that charge higher fees. Let's take a quick look at SCHD's holdings and see what they're actually putting their money in and investing in. As of now, SCHD holds 100 stocks. The fund is heavily weighted towards large cap US companies, which are known for their stability and financial strength and dividend aristocrats. Some of their top holdings, just to name a few, we have Cisco Systems, BlackRock, Home Depot, Chevron, Verizon, Altria, Texas Instruments, UPS, Pitvisor, and Bristol Myers Squibb. These are all household names, and they're the kinds of companies you'd want to invest in for their long-term growth potential and their ability to generate consistent cash flow. In terms of sectors, SCHD is diversified across several industries, with the largest sector of their allocation being financial services, second healthcare, third consumer defense, and fourth energy. This diversification helps spread the risk and ensures that you're not too reliant on one particular sector for your returns. Now let's talk about performance. Over the long run, SCHD has delivered impressive returns for investors. Since its inception in 2011, SCHD has posted an annual average return of around 12%. That's better than many other dividend-focused ETFs and even some broad market index funds like the S&P 500. If you had just invested $10,000 in SCHD back in 2011, that investment would have grown nearly to $40,000 by now, assuming you reinvested your dividends. Keep in mind, past performance is not a guarantee of future results, but this historical track record is definitely a good indicator of SCHD's potential to generate strong returns over the long haul. And remember, a big part of these returns comes from dividend reinvestment. The dividends you earn from SCHD get reinvested automatically, which compounds over time and adds to your total returns. This makes it a fantastic option for long-term buy and hold investors. One of the key things that sets SCHD apart from many other dividend ETFs is its dividend growth. Not only does it pay a solid yield, but it also has a history of increasing its dividend payouts. In fact, SCHD has raised its dividend every year since its inception date. which is a huge benefit for investors who want a growing stream of income. This is especially important when you factor in inflation. If your dividends are consistently increasing, you're keeping up with or even outpacing the rise in living costs, which helps maintain your purchasing power. Plus, if you're reinvesting those dividends, you're buying more shares at a lower price during market downturns, which can lead to even greater long-term growth and success. Alright, let's take a quick look at how SCHD stacks up against some of its competitors in the dividend ETF space. Some of the most popular dividend ETFs include the Vanguard Dividend Appreciation ETF, aka ticker symbol VIG, iShares Select Dividend ETF, ticker symbol DVY, and the SPDR S&P 500 ETF, ticker symbol SDY. All of these being great options, SCHD stands out for a reason. For example, let's go jump into the VIG ETF. VIG has a larger focus on dividend growth, but it doesn't have quite the same yield as SCHD. If we go ahead and scroll down here and look at the yield for VIG, you can see that it's sitting at about 1.6% compared to SCHD's 3.5%. However, VIG does tend to focus on more companies with a long history of dividend increases, so if you're looking for a fund that prioritizes growth over income, VIG might be a good fit for you. When compared to DVY, SCHD has a lower expense ratio and more diversified sector exposure. DVY is concentrated in high-yielding sectors like utilities and telecom, which can be riskier in terms of long-term growth. SCHD, on the other hand, provides exposure to more growth-oriented sectors like technology, making it a better choice for those who want to both build income and capital appreciation. SDY is another solid dividend ETF, but SCHD offers a higher dividend yield and lower costs. SPDY is more focused on high dividend payers, but it doesn't have quite the same balance of quality companies and long-term growth potential. Of course, no investment is without risk, and SCHD is no exception. While it has a strong track record, here are a few risks to keep in mind when investing in SCHD. The first one is market risk. Like all stock market investments, SCHD is subject to market fluctuations. If the market takes a downturn, your investment in SCHD could lose value in the short term. And another thing that you guys need to look out for is the interest rate on a stock. Since SCHD holds dividend paying stocks, it's sensitive to interest rate charges. When interest rates rise, dividend stocks can be less attractive relative to fixed income investments like bonds, which could impact the price of SCHD. And the last risk, you guys, would be sector exposure. SCHD's exposure to certain sectors like technology means that if those sectors experience a downturn, the ETF's performance could be impacted. Overall, SCHD is an excellent choice for long-term investors who want a combination of steady dividend income and capital appreciation. With its low expense ratio, focus on high-quality companies, and strong historical performance, SCHD is a top pick for many dividend investors. If you're looking for a simple, low-cost way to invest in some of the best dividend-paying companies, then SCHD will probably be for you. That's probably going to wrap up today's video, guys. If you guys enjoyed a little breakdown analysis video like this, go ahead and let me know in the comment section down below. And I also want to know, since dividends were being paid out this quarter, how much should SCHD pay you guys? I'm just very curious to know. I want to see how your portfolios are looking. And with all that being said, make sure you guys like and subscribe, and I'll see you guys in the next video. Peace.